It's been a contrasting week of bulls and bears in the price pits of the world. In summary, the bears have savaged livestock prices and the bulls are all over grain and oilseeds. Let's start with local livestock, and numbers were way up across the board and buyers kept their hands in the pockets, so indicators slumped across all categories. A single bright spot, but only just, was with feeder steers, where the indicator moved more or less sideways. Here are the indicators. Weather had a lot to do with the numbers, and of course just over the horizon is winter. And although the Aussie dollar did get a touch of the staggers late in the week, it's still causing great pain to processors and exporters. The crucial marker, the Eastern Young Cattle Indicator, slipped a fraction to close this week at $3.93 a kg. Now, the live trade out of the north is at tipping point. The quota for March is well done, and producers are waiting for confirmation that the June permits for Indonesia will be more than double the March number. 125,000 is the popular pick. Luke Bowen from the Northern Territory Cattlemen's Association admits anything less than that number, especially a repeat of the March quota, would make life very tough.
Yeah, look, I think if we saw that, that would create a huge problem.
That would be a disaster.
Well, I think it's, I hate to use words that strong, but it would be, yes, it's a significant problem. Just sheer numbers of cattle trying to move cattle out of the region, which are normally destined for that market.
What are you hoping for later in the year through the dry season?
The demand for protein and beef as part of that mix of protein is continuing to grow exponentially. So we know that the fundamentals are good. We also know that there's been some change in some of the systems for issuing of permits between the Agriculture Ministry and the Trade Ministry. So some of those things need time to bed down and for them to get a grip on what their importation numbers will be to also match with some of their aspirations around self-sufficiency. Clearly last year there was a shudder that went through Indonesia and certainly Australia, but certainly in Indonesia the issue with food security has become quite front and centre, where a supply was basically cut off overnight. So I think it's forced the Indonesians to think a bit more broadly about how they also restructure their internal transportation from cattle from certain regions in Indonesia where there are good supplies of cattle to fill areas that are requiring cattle.
Latest quotes now, and prices are soft to say the least, and there's some concern that time could become a factor, as many cattle are actually getting close to the weight limit. Ex-Darwin, $1.65 for heifers and 15 cents more for steers. The odd ship has sailed for the Philippines, but nothing in recent days to Indonesia. Prices ex-Townsville are around 5 cents less. Now back to the sale yards for our ovine friends, and this week saw the market hammered as both lamb and sheep numbers jumped. Nationally, lamb numbers are up 28%, the sheep lift was 35%, and although there was some restock interest, it wasn't sufficient to stop the indicators sliding. Lamb slipped 31 cents and mutton dropped 14 cents. Numbers offered in New South Wales were double the previous week, and the continuing hot and dry weather in the west also saw producers wanting to shed stock. Now to Chicago, home of the Chicago Bulls basketball team, which is currently on a hot streak and emerging as a major contender for the end-of-season title. The Windy City is also home to the world headquarters for grain trading. And as with their basketball team, last week the Bulls reigned supreme. Several factors influenced traders, weather of course, that's always the major factor. And this week, strong grain prices in China, where farmers are said to be actually hoarding crops. There's a forecast around of livestock needing an extra 12 million tonnes of corn this year and a production downgrade for wheat. So wheat finished up 30 cents for the week, and there were similar gains for corn and soybeans. Soybean stocks are falling in America, and there are substantial weather issues for the soy crop in South America. Back home, spot prices have been relatively steady. Wheat is trading sideways while demand for sorghum was firm, and canola followed the Winnipeg price. That canola price is up $46 a tonne in just 3 months. A bright spot last week was at the wool auctions, where demand from China, Europe and India gave the market a much-needed lift. The strengthening American dollar helped, and pass-in rates were very low as market chatter pointed to some supply problems in coming weeks. So the Eastern Market Indicator closed at 1,239 cents, a rise of 1.9%. Checking the New York trade in cotton and sugar, and cotton continues to slide, unfortunately. News that India has reversed its decision not to export cotton, pushed the indicator down, and there's also consensus that world supplies of cotton at present are ample to meet current demand. Sugar is a different story, and the gain this week was more impressive when the rising American dollar is taken into account. Prices now, cotton just above 87 cents and sugar is well over 25 cents. And I saw a report during the week which suggested Brazil this coming season will crush well over 500 million tonnes of sugarcane. Compare that to Australia's 35 million tonnes. But I'm sure that's not the full story. More on sugar coming up, but for the moment, that's the Landline check on prices.